Okay, coming at you with another training video. This one is about what to do when price reaches all-time highs, which the NASDAQ is doing almost every day lately. And what we're finding out is that when price makes an all-time high in one session, then oftentimes the first time it hits that same price again in the following session, it gets sold off. And I've got my theories about why that is. They're probably not very important. What's more important is just the technical observations themselves and what results from price getting back up to all time highs. So we saw this yesterday when we made an all time high in the Globex session, Wednesday, 4 a.m. Um, when the New York session opened Wednesday, 9:30, the price went straight back up to this level up here. And here's the level. Price went straight back up to this level and reversed and rolled over and headed back down again. So, my theory about that is that I feel like people that are buying at all-time highs are more of an emotion, have more of an emotional and less of a logical and rational kind of philosophy, if you will. I'm not even sure how to say that, but basically you've got people who are a little bit over eager and wanting, looking for breakouts, at highs. Um, and typically those aren't institutional traders. Usually institutional traders are buying, down below. They're accumulating at better prices and selling at highs. So something to watch out for. So it pays to look for signs of reversal when you get to these all-time highs. So yesterday we had FOMC, and at the very end of the day we had a spike which put in a new all-time high. Okay, so it didn't end there. It kind of came right back down again and closed somewhere in the middle of the price range for the day. So then we have the after New York session, which is sort of the Asian Open, which happens around 1900 hours, and they immediately started buying it back up again. And so let's talk about the definition of a trend, because that's actually important for watching how the reversal happens this time around on this Asian session. So the definition of a trend is always going to be an uptrend. Definition of an uptrend is always going to be when price makes higher lows. Now, everybody often says, what about higher highs? And that's true. But to me, the lows are more important to watch, because the lows are where people are making decisions about, hey, is this a good deal? Is this a good place to buy? Versus where am I selling? So, um, uh, and the reason I say that is because when you're looking to get in, you're looking for pullbacks, to swing lows, right? So that's what I'm kind of watching when I'm defining an uptrend. I'm looking, what are the pullbacks doing? Are they allowing it to double bottom, or are they saying, no, I want to get in before it double bottoms, and I'm not going to let it double bottom? So for example, right here, we had a nice big uptrend, and then it came back down, but it couldn't reach back down even to make a double bottom. Okay, so this swing low um, is higher than this swing low. Okay, same goes for this swing low is higher than this one. This one here, higher than this one. This one here, higher than this one. This one here, higher than this one. And you just keep watching the swing lows, what they do. Okay, this one higher than this one. It couldn't even double bottom. See what I'm saying? This one here, higher than this one. This one here, higher than this one. Until you get to this one. And this one's very obviously a break in that pattern, right? It's a break in the higher lows. So now we're going to start to pay attention, because what has happened just prior to that? The red represents the all-time high that was made at the end of the Wednesday FOMC news session, right? So what's happened is we've gone up, we've breached the all-time high, 3 times, and then we put in a new swing low. Now you should really be, the hairs on the back of your neck should be standing up. You should be thinking, okay, something has changed now that we've hit the all-time highs again. Okay, got a lot of froth up here. We got 3 big spikes up. Basically, it's a triple top. And so remember how I told you before that when you're looking to buy a low, you want to keep your eyes out open for either a doji or a hammer. Well, the same is true if you're selling a high, right? So here we're on a 15-minute chart here, so to filter out some of the noise of the market. And I've got a nice doji here, and what's great about this doji is not only is it red, but it's also got a much higher top wick, which indicates more sell pressure than buy pressure. So there is a balance point of pressure here, but it's a little bit more to the downside. Now here's a hammer to the downside, but what happened here is that price was definitely able to breach the midpoint of that candle and go higher. Okay, so here what's going to happen is that we're going to put a Fibonacci sequence on this, and we're going to do it upside down, right? Because now we're looking to go to the bigger number is going to be to the downside, right? And the smallest number, 0, is going to be at the top. So I just put an upside down Fibonacci on this, using this candle's swing low and swing high as my touch points. And what I'm looking for is a pivot right here in the pivot zone, which is the area between 0.382 and 0.618, with 0.5 being the dead middle. Okay, so that's basically what we've got here. We've got a huge uptrend in the Asian session after the FOMC news of the New York session prior. We got a solid uptrend indicated by higher lows, higher lows, higher lows, higher low, higher low, higher low, higher low, higher low. Then we got a break in that structure, structural break. No more higher low. We got a lower high. A lower low. Okay. Then we decide, we look at that and we say, okay, that is a doji. That is a reversal signal potential. It's red. That's bearish. It's got a higher top wick. That's bearish. Let's measure that and let's see if price can get up to above 50% of that candle length or not. If it can't and it pivots under the 50%, that's also a very bearish signal, and it could be a sell signal based on everything we've been talking about over the last couple of days, right? Okay, let's go ahead and get a closer look at what's going on there. When that candle completed, I put this on, and now we're watching to see what happens in this zone here. The zone is the pivot zone between 0.618 and 0.382, okay, with 0.5 being the dead middle of it. Now, as you can see, price is kind of spiky as it comes into the zone, but it does get within a couple of ticks of the 50% level, which is 50% of the height of this candle, this doji candle here at the all-time highs that had a structural break, a lower low than all of the candles preceding it. I've talked before about how important it is to wait for MACD to hook over, and I probably should be talking about MACD actually converging and diverging. That's the true test of a MACD roll, is when you've got convergence and divergence. That's actually what MACD stands for: moving average, convergence, and then divergence. MACD, MACD. So when that happens, okay, price starts moving, as you can see, a lot more with a lot more volume, a lot more decisiveness than it had as it was kind of approaching the pivot zone. You can see how the shape of the candles gets longer. you've got MACD rolling over, right? So it's safe to say that that is a good entry right here. That's an entry that you'd want to get involved with more than likely. It's going to work out, and then trading it is that is a whole other ball of wax. But basically, you could put maybe a 15, 20 point stop on it, 17 point stop, something like that, if you're getting in here. And let's go ahead and sync that up because you can see how far that goes down. Okay, well, anyway, it's not doing it. But basically, the thing goes down about 250 points, right, from there. It's an amazing trade. It really takes off to the downside, and I can't even I can't even make this thing work. Okay, it's not working. All right, I take it off. Anyway, you get the picture, right? I hope you get the picture. This is a pretty good trade. And the way we identified it was just through all the things we just talked about, right? Like all-time highs. That's probably a good place to sell with the institutions because that's what they usually like to do. How you recognize a structural break, and there are no more higher lows anymore. You got a low that's actually lower low. Okay, it comes as part of a doji, which is a pivot symbol or a signal. Using the Fibonacci retracements and extensions tool, you can measure and see how far price wants to go when it after it makes that new structural break, right? You can actually see how far price wants to go back up after the structural break occurs, which is right here. And as you can see, oh, hang on for a second here. No, we put it here. Okay, that's the important one. Okay, we put it on the new candle. We don't put it on the old candle. We use the old candle to measure it. We use the highs and the lows to measure it. Like there's the low and there's the high, right? But we put it on the new candle and then we look to see what happens. And as you can see, it spikes almost up to the midpoint here. And you could sell it there, but your MACD, okay, is still on the rise, right? So I don't know how many times I've made this mistake where I'm getting in while the MACD is going the opposite direction. I want it to go south. MACD is pointing north, okay? So I can't really, this is the one thing that I simply cannot emphasize strongly enough. You have to wait until you get a true rollover on your MACD or your stochastics, as the case may be. If you don't wait for that, then it's too easy to get faked out and be wrong about the direction. So, it's hard to wait. As a trader, you don't want to miss the boat. You don't want to be too late to the party and not get in and have the thing run without you. I get that. I believe me, I understand that probably better than anybody else. But the thing is, you don't really start making money until you get over that and you say, you know what? If it goes without me, it goes without me. I have to wait for the confirmation of my price action, okay? And if you don't even use an oscillator or something like that, you can just look at the price, okay? And you can just see, okay, now it's really going, okay? And don't worry about being late. Just put your stop above the high, okay? And make it maybe a smaller stop, dollar wise. Maybe do like a half. If you normally risk $200, you risk $100 on it. But just make sure that you wait for confirmation that price really has rolled over. If you do that, your win rate is going to just go so much higher. It really will. All right, so anyway, that is the lesson for the day on reversals at the top of a trading range. And as you can see, some of the potential there. is great. I love to short, by the way. I really do. I think shorts are amazing. Um, you know, I'm going to be looking for these myself more often. I actually have a couple more examples I can show you in this new Asian session, but I'm not going to get into that because I think the video is long enough already. But there are more examples like this that happen even just a few minutes later. Okay, that's it for now.